Hello friends, Patrick here. It has been a fun August, therefore I have not really been at this desk doing the YouTube videos as I normally would have. We've done lots of stuff over on Instagram and a bit on Facebook as well, so if you're not following us there, you can check us out right there to that address. But I'm here to get caught up, bring you up to speed on what's going on in the market right now, what's happened in the last 30, 60, 90 days over the summer, and then where we see things going, crystal ball time, where we see things going in the next sort of 30, 60, 90 days into the future. We're going to look at supply, so the number of new listings. We're going to look at demand, how much, what's going on in terms of the sales against supply. What's that shaking out? And then again, the result of those two things and how they interact usually dictates whether price is going up, down, or staying the same. And lots of talk out there about the market, the average sale pricing. Is the market softening? Is it correcting? So pricing is a really good indicator of that, and we'll show you what's going on again right now, going back, really back to January of 2020 to see what's happened all through COVID, and then a few little sort of bonus tidbits at the end. So we're going to look at Niagara region as a whole. St. Catharines, Niagara Falls, and Welland are 1, 2, 3 in the total number of homes sold every year. So we'll look at those as sort of representatives of the region. In general, though, the same commonalities are going city to city. Remarkably consistent across most of Niagara, Lake and Lincoln, so Beamsville, Jordan, Vineland, all that area. Those are a bit unique, right? Because they're much more segmented, all kinds of different pieces to that pie. But in general, whether it's St. Catharines to Fort Erie, Welland, Thorold, very similar market conditions across the board. So let's get into it. So the best way, I think, to assess any market is the supply of whatever you're trying to sell against who wants to buy it, right? So you have a store and there's tons of widgets on the shelf and not enough people that want to buy them, then pricing comes down. And then if you have, this many widgets, but there's a lineup down the street that wants to buy them, then you're going to have escalating prices, which is exactly what we're seeing here in the Niagara real estate market. So when we look at supply of new listings against who wants to buy them, it's no secret, February, March, April of this year were monster months, historic, probably records that won't get broken anytime soon. Going back for any month, huge time. So naturally, we saw things start to settle down as we got through April, May, and then June, July, August. So as we saw things return, it was sort of in June and July, we saw things start to get approaching back to what is normal for those months, as opposed to being up 50 or 60%, right? And so August 2021 has really been a month that's returned back to what's normal for August. In fact, for the number of new listings, August was actually below average. Looking back at August's going back a decade, August 2021 was actually less than. Sales were marginally over normal. So rather than being, 50, 60, 70% higher than normal, 5, 6, 7, 8%, depending on the city you're looking at. So for the entire Niagara region, August 2021 was third lowest for number of new listings and number of sales looking back at the beginning of this year. So third place finisher. In fact, August of this year, when looking back at previous Augusts, going back a decade of August, the number of new listings this year were actually the last place, lowest number of new listings for August when comparing to August 2020, August 2017, 2013, whatever, last place. And the number of sales were third highest in the last decade. So you got last place finisher, coming up, they're folding the chairs and taking the finish line tape or whatever they call it. I never did track. Taking that down, and then here we go, August 2021 is limping to the finish line, but in sales, it's third place. It's on the podium, right? So that imbalance is what's produced the pricing that we're seeing. Year to date, listings and sales in August down 2020 to 2021, down 22.9%, identical, which is really weird when you're looking year over year. But again, you have to remember that we had this historic run. We had COVID lockdowns relaxing, all kinds of things, external events and internal real estate events that happen at the same time to get us to where we are today. So a few graphs to show you. This first one shows you monthly number of new listings in Niagara compared to the average going back a decade. We've shown you these before, so this is really just updated with August data. And you can see new listing inventory in the negative. Here we are in August after being significantly above back 4 or 5 months ago. Sales, same deal, but still moderately positive, right? So still tracking above what was normal for July and August, not in the negative, but again, you can see it's a return to normal. This here shows you new listings for August 2021 versus last year. You can see that percentage change. As mentioned, 22.9%. And then here's the sales, same deal for Niagara region for the number of sales this August versus last August. So there's all different ways you can compare it, right? You can look this month to last month, this month to last year, this month to historic averages. So we try to sort of cover all those bases. So that's Niagara. So what's going on with St. Catharines? I've mentioned a whole bunch of times before. St. Catharines is the ~1 producer of sales in the Niagara region. So where St. Catharines goes, the entire market largely follows, because it's about 20-25% of all sales in Niagara happen in St. Catharines. So far this year, St. Catharines has kind of stunk the joint out as far as the supply of new listings. 5 of the 8 months in 2021 up to the end of August have been below average months. 5 of 8. I don't know what the math is on that, but it's more than half. And so when you put that up against demand that's just kept pushing and pushing and pushing, you see these competitive offers and buyer frustration and everything else that's just kept going month in, month out. So how low? August was the 3rd lowest month this year for the number of new listings, which is similar to what actually it's exactly what Niagara region was, and the lowest in the last decade. When you look at this August versus last, it was down 29%, 29% decline. Meanwhile, demand, the number of sales, the last few months were relatively flat with what's historically normal for June, July, August. August was 4th lowest this year and 6th place this decade. So out of the last 10 or 11 years, August 2021 placed 6th place. So remember, sales for the Niagara region, August 2021 was 3rd. St. Catharines, it was 6th. And again, year over year for the number of sales, August 2021 was down 15%. So not as bad as elsewhere, but again, you have listings down 29%, sales down 15%. You still have sales no matter what happens. Even though the market's settled, you still have that disparity between supply and demand, which is creating all the stuff that you guys know that's going on out there. So same deal. So here we go. Number of new listings. You can see here month by month for 2021 compared to what's normal for those months, or the 10-year average for those months going back to 2011. Same deal here you see for sales. And again, wide open back in February, March, April, the record-setting months. And you can see it's tightened right back up here in July and August. And then August 2021 versus August 2020 for new listings. You can see the decline. And again, some will look at that and say the market's correcting, or it's softening, or it's whatever. It's really a market that's normalizing or finding its footing after running faster than it's ever run 5 months ago. And sales, again, August this year versus August last year. Again, same deal. Second verse, same as the first. So that's for St. Catharines. Niagara Falls, I don't have this memorized. I got papers. So for Niagara Falls, so the last 3 months, Niagara Falls, you'll see in a second, it snapped right back to normal for the supply of new listings. June was down 2% historically. July was down 14% historically. August down 22% historically when looking back at what's normal for August over the last decade. August this year was the 2nd lowest month so far in 2021. It was 2nd lowest and the lowest in the last decade. August 2021 new listings in Niagara Falls this year, this August versus last August, down 33%. That's a huge decline, or a huge change, right, in things. And so when you put that up against the number of sales, February, well, Niagara Falls, like other markets, but it had some really big numbers. February was up 70% over what was normal. And ever since that 70%, we've seen this sort of kind of a steady adjustment back to normal, to where August was up 1%. So February up 70% over normal, August up 1%. So basically almost a no change kind of month. And for the number of sales, August this year was 2nd lowest so far this year, and 4th place for August going back a decade. So it placed 4th. So again, even though it's down, the demand was down 28% August year over year. It was 4th place. It was, only up 1%, but it's still the 4th best August we've had going back to 2011. So all in all, not terrible. Same deal here, month by month 2021 in comparison to what was normal, or the averages each year. And you can see that sort of snap that happened in June, July, and August as things tightened right up. Sales, same deal, going back comparing each month in 2021. So again, and like I said before, almost every city in Niagara has behaved some version of what you're seeing here in these graphs. Here is August 2021 new listings compared to August 2020, and pretty significant percentage changes for that, and same deal here for sales. So that's Niagara Falls and St. Catharines. The same deal for Welland. I could go on and on. You're going to hear roughly the same dynamics that are going on. So as I said before, supply and demand, those always factor into and result in pricing trends, whether they're up, down, or unchanged. So we're going to get into that next. It just occurred to me, I had an espresso before I did the previous segment, and I don't know if I was talking too fast. If I was, my apologies. I think you're all clever, so I'm sure you got it all. It's not exactly high-level economics, but if I was talking fast, my heartfelt apologies. So supply and demand, what happens from it? It trickles down and affects pricing, right? So sale pricing gets a lot of press. It's the big one, right? It's the home run for the baseball player as far as stats go. Maybe batting average, one of the two. So when we look at what's been going across Niagara, a lot of bizarre commonalities across most municipalities for average sale price so far here this year. So year to date in 2021 versus the annual average sale price for 2020, 7 of the 10 municipalities in Niagara are up 25 to 29%. St. Catharines up 28% year to date. Niagara Falls 27, Welland 28, Grimsby 26, Thorold 26, Port Colborne 29, Fort Erie up 27%. Huge numbers. Unprecedented. And I'm going to show you in a second here the average sale price monthly going back to January of 2020, pre-COVID. Remember that? That was a thing. So you'll see a lot of the price increase, or a significant amount of the price increase happened at the very end of 2020 into the very beginning of 2021. So you'll see there's a pretty steep climb across a lot of the municipalities, and then it's sort of been bouncing up at this new altitude ever since. So I'll get cracking at it. Here's Niagara region again, going back to January 2020, monthly all the way through to present day. Average sale price for Niagara was $700,000 in August. Year to date, it's at $694,000, which is up 25% over last year. St. Catharines, August, you can see $646,000 for an average sale price. Average year to date is at $633,000. So again, still pushing, right? And again, St. Catharines up 28% year to date. Niagara Falls, $665,000 for the month of August. Year to date at $652,000. Welland, it's been pushing up to 600. It hasn't got there yet. So a bit of a step back in August at $564,000 for an average sale price. Year to date, though, Welland sitting at $578,000. Niagara Lake, as mentioned, Niagara Lake had a huge year last year. Make no mistake about it, a monstrous year. It's definitely calmed right back down. When you look at the summer months, the average, the total number of sales and the total number of new listings, way down from the same time last year. August, $1,040,000 for Niagara Lake. Year to date, though, at $1,096,000, and again, that's an increase of 14%. Grimsby, $868,000 for the month of August. Year to date at $847,000. So again, August pushing the envelope, right? Lincoln, so Vineland, Beamsville, Jordan. Largely, that's the area, and rural. August, $821,000. Year to date, sitting at $801,000. Thorold, big year so far. $695,000 was the average sale price for August. $634,000 year to date. I know a lot of people will say, "Oh yeah, but new construction." There's hardly an adjustment to be made when you take new construction out of the data for Thorold. So it doesn't have the impact that a lot of people think it does. Font Hill, August, $868,000. Year to date, $899,000. It's been flirting with year to date average sale price of $900, plus or minus for the last little while. Port Colborne, again, you got to watch out for Port Colborne, Fort Erie. Lots of waterfront stuff that can skew the numbers because there's not a huge pool of sales data to begin with. So, one $3 million cottage can mess things up. But when you look at the market, it's part of the market, right? So $603,000 for August year to date, sitting at $653,000. Fort Erie, pretty close, $647,000 year to date, and you can see they had a big August at $729,000. So that is sale price overall, and what's been going on so far, again, last month, this year, and then comparing. Okay, one more thing. All right, guys, a few little bonus items, and then we'll wrap up. Next, sales over $1 million. It wasn't that long ago that Niagara-on-the-Lake absolutely dominated that end of the market. The majority of houses over $1 million sold in Niagara-on-the-Lake, and we've really seen that distribution change where now it's, Niagara Falls, Fort Erie, St. Catharines, Grimsby, Fonthill, they're all getting in on the mix. So now we're seeing these sales over $1 million just sort of spread out and push that overall volume of sales over $1 million up to levels we've never seen. Case in point, 2020, there was 435 sales over $1 million. Right now, September 8th, I don't know what day, I think it's like day 250 or something of the year, we're at just under 800 sales. So 435 for the entire year last year. We're at just under 800 here on September 8th. We are on pace for about 1,150 sales over $1 million in 2021, which now accounts for about 10% of the market. So about 1 in 10 sales in Niagara are over $1 million across the whole board, the entire region, which is pretty incredible stuff, right? That's so 1,150 sales this year. That's about 3 times, just under 3 times the number of sales that happened in that same price bracket last year. Another one, days in the market. How long does it take me to sell my house? Because that's a big one, right? What are you going to sell it for? How much of a pain in the butt is it going to be? And how long is it going to last for? We are historically quick right now. The Niagara region for August is 22. Year to date is sitting at 20, just under 3 weeks, a day under 3 weeks on average so far this year. St. Catharines, similar, 21 days. Niagara Falls, similar. Unless you get into the Niagara Lakes and the Lincolns and that, which are different markets, they're harder to put, to group because they're so diverse. But largely across Niagara, you're going to see the same trends. Put that in context, last year, 2020, the average was 43 days, and 2019 was 55 days. So right now, it'll probably edge up a little bit. Right now, we're sitting at 20 year to date. Let's say 2021 wraps up at 23, 24 days. It's still going to be one of the fastest years as far as time to sell that we've had going back. I don't know what the 2005 and 06 numbers were. I know what you're saying. You don't? No, I don't. But those were quick as well. But I would hazard a guess this is going to be historically one of the quickest days on the market years that we've ever had. So that wraps up those bits and pieces. So, from all of that, the $1 million question is, okay, so what happens in the fall? Well, I can tell you what hasn't happened. And in the last month, the supply of new listings has only gotten worse across the vast majority of the Niagara Real Estate Board. And that lack of supply, coupled with demand that even though, everybody's gone to the cottage and everything's softened in August, we're still seeing the demand for houses exceeding listings. Even though it's not up here anymore, it's still that relationship is still, demand is beating listing inventory. So, what's the difference if you have 30 buyers trying to buy 20 houses or 15 buyers trying to buy 12? I don't know if that's the right math. You still have that thing where you've got more buyers than there is inventory. So September is typically somewhat of a secondary spring market where we'll see people will say, yeah, we'll get going after Labor Day. We are 2 days into the week after Labor Day. It's not bad, but we've seen really strong sales too. I showed, I don't know how many it was, 7 or 8 houses in the last 5 days, and every one of them sold. So until we see that listing inventory start to build up and all of a sudden we have too many widgets on the shelf, we're still in that same position. Again, whether listings are here and sales are here or they're down here, until that starts to get closer or flip a little bit, we're in the same boat, right? So for people that are considering whether to sell if they think the market's corrected or whatever, I can assure you right now the competition is historically low. When you look at the number of new listings, we put a graphic up on Instagram the other day. It's on our posts. It shows you the number of active listings per month for the last 4 years for St. Catharines. You can see 2021 is riding way down here. It's lower than what's been normal going back to 2017 or 18, something like that. So if this continues on, we will continue to see pricing doing what it is. We'll continue to see competitive offer situations. Where that's going to start to edge is where we see more listings come online. I know us personally and anecdotally talking to other agents, there's a lot of inventory ready to come online. So, optimistically for you buyers out there, you're going to see better choices. But we have a ways to make it, right, before we start to see things settle, because there's this sort of pent-up lineup still sitting over here that's looking for stuff. So it'll be interesting to see what happens over the balance of this year. But I think it's going to be still competitive, but subdued a little bit. And then the what happens in the new year, in the first 2, 3, 4 months of 2022, it's anybody's guess. Our word on the street is it's going to be strong, but nobody really knows. Nobody could have predicted. You look at what happened quarterly over the last 2 years. Show me the person that said we'd be up 25, 28% across the vast majority of Niagara so far this year, right? So it's a tough game to predict. But right now, the very near term, I can tell you with certainty that we need listing inventory in order to offset some of this buyer demand. It's as simple as it gets. I think that's good. On our website, there's a market tracker. Look right there. Where we track new listing inventory, sales, and pricing throughout the months as we go. So it's sort of updated continually. So if you ever want to pop on there, you go to our website, you'll see a little market insight button right about there. Click on it. It'll bring you to that page. If you ever have any questions on the market, you can reach out to us on any of our platforms, LinkedIn, Twitter. In fact, I only use Twitter for baseball and weather, but otherwise Twitter's there for you. Instagram, Facebook, email, text, fax, whatever it takes. Okay. Thank you guys. I appreciate your time. Any questions, reach out. Cheers. Thanks.